Good afternoon, traders. This is a live trade recap. I took 3 trades right at the market open. We're going to go over those, but I just want you to know the theme of this video is going to be rejecting stocks from the screener, how and why, and I'll show you that in just a moment. Let's take a look at the screener first so you can see the screener criteria that I use. My mid-cap screener, always click these 3 dots, click modify, otherwise your filters are not applied. So there's my filters, and then I always organize the list by volume. So I'm looking at the stocks trading with the most volume. So here, this is similar to this morning. Root, SDC, Wish, there was a few others, SoFi. There was some others that are not on here anymore. Those are all green, and according to the volume, and as long as their percent change is 2% or greater, I look at them to consider a trade, but they must meet my chart criteria. None of these did. All of them, the 200 MA line on the daily chart, the price was below the 200 MA line on the daily chart, or they didn't have a 200 MA line. If that's the case, then I just reject them right away. I don't look for a trade. So let's take a look at the video, and you'll see me put a bunch of stocks on my chart page looking for entries. So here's Root. There's the 200 MA. It's just a little bit of it. That means that it's a newer stock, but the price is trading below it. So that is a rejection immediately. TAL, same thing, rejected. Don't have to look for trades on it. SDC, and the reason why is because if it's below the 200 MA line on the daily chart, then it's in a overall downtrend, and I'm trading against the trend. That means the probability of the trade working out is lower. So I'm not going to do that. Wish doesn't even have a 200 MA on the daily chart. I don't trade stocks like that anymore. That's on my plan not to trade those. Same thing with MQ, no 200 MA line. Skills is below the 200 MA line. SDC is below it. SoFi doesn't have one. So here's MMAT. That one popped up on the screener, let's see, right around 9:35, and it had a market cap of 1.5 billion shares, which again, if we just look at the screener real quick, you could see that's just at the threshold of my screener. So it popped up all of a sudden right here at the #1 spot. It had the most volume out of any of these stocks, and it just met my mid-cap screener criteria. I think later on it sold off and fell off the screener, but that doesn't matter. At the time I was trading, it met my screener criteria, and it also met the daily chart criteria. It was trading above the 200 MA. Right here you could see the 200 MA line, and you could see we are gapped up above it. So it meets my criteria. A very strong move out of the gate. Also, I didn't mark out the previous high, but it's right here on the daily chart. I'm trying to get to it here in the video. So there's the previous high right there. So you can see that it's broken out over that previous high. So all of my chart criteria is met to look for a trade. At this point, all I have to do is wait for the pullback and then my entry, which is a 1-minute candle making a new high after a pullback. So right now I'm marking out the bottom of the ABCD pattern. That's this red horizontal line. Let me back up a little bit where you can see it better right there. So if the price comes down below this level, that 490 level, then I can't take a trade. The ABCD pattern has failed, but that doesn't happen. So now I'm just waiting for a pullback and waiting for a 1-minute candle to make a new high. Well, the pullback is already here, just waiting for that 1-minute candle. So here I'm hovering over this candle. It has a high of 546. I want to see 547 or better to get in. Doesn't happen on that candle. Now this candle has a high of 545, so if I see 546 or better, I get in, and there it is. Let me just play that in real time and back it up. Okay, so watch here. There, you saw it break out, and then I hit my hotkeys. I got filled 1 cent higher, not a big deal. The essential thing, the thing that I'm trying to remind myself of is to super quickly get that stop loss into place, because you never know when these stocks, especially these more volatile stocks, are going to turn around on you and flush down right after they triggered your entry. So it's more important to get that stop loss roughly in place than to know exactly where it is. And as soon as you get it roughly in place, then you can check, hover over the candle, find out where the low is, and then move the stop loss exactly in place. So a couple of weeks ago, I was a little slow getting that stop loss in place, and exactly what I just said happened, where it turned against me, flushed down, and I took a bigger loss than I had to. So that's what we're trying to avoid there. So now I'm in the very first trade of the day, and I know based on my statistics, even though this is the so-called high probability setup that everyone talks about, this is the highest probability setup you can take when the price breaks out over the previous high and gives a pullback. But based on 83 trades, the first trade only works out about 33% of the time, which is break even for all or nothing 2R. So it fails more often than it works out. The second trade works out about half the time. And then the third trade works out a little more than half the time, about 55% of the time. So Is that high probability? I mean, that's the highest probability thing that I've found, but I just hate when people say that, or that this setup works out 90% of the time and it just didn't work this time. I mean, do they really know that? Did they really collect the data and track all of their trades? I doubt it. They probably heard someone else say that, and they're just repeating that and assuming that that is the case. And that's really a bad thing to do with trading, because the margin of error for trading is extremely low. It's a very difficult skill to develop. So the best thing to do is whatever strategy you're trading, whatever setup you're trading, track the data and you find out for yourself what is the probability of that setup working out for you. So that's what I'm doing. And here's the first trade, which I expect to fail because I know it fails more than half the time, and it does. And let's move on to the next one. So what my plan says to do is to take the next entry, which is when a 1 minute candle makes a new high. Now, if the second trade works out, then I still end up profitable on the day, because the first trade is a -1R, the second trade is +2R. So I would end up one times my risk on the day. Here I'm using my 2-hour profit calculator again. Just put in the entry price, the stop loss, hit enter. It calculates the 2-hour profit target for me. If you want that, you can get that at patreon.com/tradingarmor. Very handy tool. Now I just slide my profit target into place, and the trade is all done. I don't have to do anything at this point. Let's fast forward. Again, this one has about a 50-50 chance of working out after 83 trades. And there it gets stopped out. So the third trade has more than a 50% chance of working out. So it's definitely worth it to continue to trade. If I would stop on the first trade, I would basically be either break even right now or slightly red on this testing strategy. So taking the second and third trade, that's the only reason that I'm green. And I will talk about what I may do after this testing is over. Once I start trading full position size, how I can modify that first trade so that I don't get stopped out so often. I have already thought about that, so don't worry. I just want to finish this strategy without changing too much else, or this plan. So now here I'm looking for the next entry. The high is 511, so I'm looking for 512 or better. I think it happens on the candle after this one. It's going to happen very shortly here. So there's that candle. So I'm looking for 512 or better. Watch this price bubble. As soon as I see 512 or higher, then I trigger my hotkeys to get in. We're still above point A of the ABCD pattern, so this is still a valid entry according to my strategy and my plan. So it's going to happen here in just a moment. There it goes, 512. You can see I triggered my hotkeys pretty much instantly. Again, I got to move that stop loss up really fast. I keep hovering over the candle looking for the exact low, and I just reminded myself in that moment, don't do that. Just get that stop loss up in place. It's just too risky to take your time and find your perfect stop loss. So you can always do that after the fact. All right, so now we have the entry, the stop loss, and we're moving the profit target in place. This is the third trade of the day. No matter what happens here, I stop trading. Even if this trade loses, I'm happy to walk away with a -3R day instead of continuing to trade and adding to those losses, because that's more likely what could happen if this trade doesn't work out. So now we just let the trade play out. Let me fast forward a little bit because it does take a little bit of time. So pretty choppy here. And just think, if you were not a disciplined trader, would you be able to ride this out, or would you start pulling your profit target down thinking, oh, it's not going to hit, it's, this thing's pretty weak? I used to think like that. I used to trade like that, but in the long run, I was always red. So now I know it's better just to let these trades play out, let the statistics work in your favor. I know this third trade has a higher likelihood of working out than failing, so why not just let it play out? And here you can see it bouncing off 535. I just let that profit target sit, and then finally gets hit. It goes up a little bit higher, and then I think it reverses, but very successful trade there. So that makes me break even on the day, and that's the way to go. So let me show you on the spreadsheet really quickly. Just want to show you those statistics that I'm talking about. So right now, after 83 trades, here is the win rate of the first trade. Since this trade failed, it actually pulled it down below break even. And again, I'm going to address that. I'm not going to tell you what I'm going to do yet, but I'm going to address that at the end of these test trades. We have to get to 100. So we've done 83. We've only 17 more to go. We're almost there. I just need to keep trading this the exact same way so that I know the changes that I need to make after this is over. We're almost there, and I am going to do something to keep that first trade from hurting our results. If it continues to be red, it could reverse in these next 17 trades, so we'll see. Trade number 2 is well above break even. Break even's 33%, so it's at 46.15, and there's the win rate of trade number 3. That's 53.85. Now, the thing about these stats right here is they include every single trade I've taken up to the third trade. So that includes some trades that were taken in error, some trades that I would no longer take based on my current trading plan. And this data over here is if I remove those trades that were taken in error or that no longer meet my current plan. So this is kind of like, well, what if I was trading the current plan from the beginning? The results would be closer to here. So you can see the win rate of the first trade is profitable. Then the win rate of the second trade is here. And the third trade is actually a little bit lower win rate. But I think that's because I haven't either I didn't update it correctly. I think I did. I need to look at that. Either that or just because there are not as many trades there, but something looks off there on that one. So I'll look into that. But anyway, that's pretty much the data that we're looking at. And then this is the other thing. This is why I take more than the, well, again, this is trade number 1. If I would only take one trade and stop, this whole test trading plan would be down -1R right now. It's up 10R. It's up 10 times my risk. Why? Because I continued to trade. Here's the second trade. It's up 10R. Here's the third trade. It's up 8R. Even though it has a higher win rate than the second trade, it's only up 8R because I haven't taken as many third trades as I have second trades. So that's that. And then this is a really important data analysis to look at. When the first trade fails, how likely is the second and third to go to 2R on the same ticker? That's all we're doing right now, is just trading the same ticker up to 3 times every day. So how many times 2 trades were taken on the same ticker on the same day, including the ones that went to 3? So we've done that 19 times. So again, it's not a huge number. It's not really enough to draw a conclusion on, but I'm going to continue to track this even when I go full position size. So eventually we will have enough data. But I already know how many times it went from red to green on the second trade. It's 8 times, so that's 42%. Anything above 33% is profitable, so we're good there. How many times on the third trade, or how many times did we take 3 trades on the same ticker? 7. And how many times did it go green on the third trade? 3 times out of those 7. So again, about a 43% win rate there, definitely profitable. But we need really more data to draw a conclusion on that. So that's all I'm going to go over right now on the spreadsheet. We'll do a big run through at the end of the week. I release that video every Sunday. So anyway, let me know if you have any questions about this trade or any others, about my spreadsheet, about my trading plan. All that stuff is available at patreon.com/tradingarmor if you're interested. And other than that, go into every single trade with a plan. Stick to that plan no matter what. It should be based off of your data if you're tracking your trades. If you're not tracking your trades, you should track them. Start tracking them immediately. And then, as always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.